Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer. Keeps you sane in insane markets and also giving you master classes on technical analysis. And I want to cover something that is a pretty strong indicator of a trend continuation, and it's called a cup and handle. A lot of people have heard of them. People don't really know how to find them. It's best really to find them on a longer term chart where they're actually more prevalent, and also they give you a much better signal than a short-term chart, although short-term charts work as well. But generally what we're doing is that what you have to do is when you're looking at a marketplace, you're looking at the structure of a market and you're looking for a reversal. So if you notice at this price point, Bitcoin, we're talking about Bitcoin right here, in like 2020, made a high of 66,000 and then had a bear run all the way down to 17,000, all depending on what broker you have. Some people say it was 16,000, but on this broker is 17,000. Okay. Now, what you're looking for in the cup, okay, is a U shape that reflects a downward recovery off of the lowest point that we have. So we have the lowest point right here of that, actually right here, that's 17,000. And the marketplace actually just starts to slowly turn back up and recover. Okay, it trades a little bit outside of it, but it's okay. Look what it did here. Basically just flatlined. It was in a rectangular like bullish movement right here. And I'm going to go over that pattern as well. Okay, I'm going to definitely go over that pattern. I'll show you in the short term how you could find it. It's generally just known as a rectangular bull pattern, you know. So it's bullish. Okay. Too much espresso. It's a bullish rectangular pattern, and I will cover that in a second. Actually, the next video. So right now, we're looking for, in the cup, we're looking for the recovery. Okay, you do get the recovery. You get a slightly higher high right here, which is important. Okay, so marketplace broke out. But, you know, the bears came in, the people that were negative came in, came down and knocked the marketplace down right here, actually forming the handle, okay, which is an important thing. It's a short downward or sideways drift that acts as a final consolidation before the breakout. So what's the psychology behind it? The cup itself actually shows the transition from fear going all the way back up into optimism. The handle is a period of hesitation. It's where traders wait for confirmation. There's never any confirmation. The market never waits. Okay, so it's either you got to make the decision or not make the decision. You have to have a trading system that gets you in the train before the train moves. If you bought this breakout, you'd have to use a pretty damn good tight stop loss. You'd probably have to come back into this chart and really look like down at 50,000. So you're buying at like 70, 71,000. And this is long term, so if you're a long term trader, $50,000, 50,000 coin price stop isn't really that too much out of the money. But for short term traders, that's a lot of money. But anyway, so just repeating, the cup basically shows a transition from fear back into optimism, coming back up. We got the breakout. And then the handle is the transition. It's like the hesitation. Traders wanting confirmation that it's going to be a break upward. Okay, so really what people would do if they're trading this, okay, they would break out. They would buy the breakout of this top right there. Professional trader is going to buy the breakout of that top. Is going to put his stop right down over there. So that's a much more acceptable stop loss right in this area. It's actually the same damn thing. If you bought the original breakout, you notice that you still had to place your stop basically coming down into this area right here. So it's really showing the same thing. So I don't know. I didn't really give you guys anything on that. But like I said, this is a long-term pattern. Now, all right. So you would buy the breakout above this resistance right here. Okay, your stop, we were going to say is going to be placed down here. Now, what's the target? Well, you measure the depth of the cup. And then you apply that to a target point up top. So we're using Bitcoin right now. So if I took the old top of say 66,000, and we say it went down to 16,000, okay? So that's 50,000. Now, if I take 66,000 plus 50, but I get 116,000. It went to 109. That's, I mean, that's damn close. Now the marketplace actually is consolidating a little bit, and you could look for other patterns. Some people think in Bitcoin to the moon. Some people are saying we're going back down to this low of the handle here. Yeah, I mean, it's all over the place, really, what opinions are in it. But really, I just wanted to show you what a cup and handle looked like, how you could use it. So what do? You go to a longer term chart and you look from a marketplace that made a high, and we had a downward movement, and then all of a sudden you have a nice slope upward. So you got a downward movement, right? And then all of a sudden you find this nice slope upward, then breaks through that top, and then basically hesitation, and then boom, breakout. Okay, so really, if you saw this, and if you were a technical trader like this, you would have been selling 109s, 110s. Right, stop like 116. It's only $6,000 compared to when you bought this breakout at 70 and you got to put it stop at 50. It's, $20,000. So I hope that helped you out. Please leave some comments for me. Tell me what other patterns you'd like me to go over for you. I'd be happy to do that. And remember, you could always head over to Park Avenue Trading, get yourself a free ebook. And please share my video far and wide. I want to build a big trading community. And remember, always, if you're a short-term trader, enjoy the party, but dance near the door. Cheers.